Welcome to KYC. This is Hiral Dadia, and with me is Anushi Vakaria. We're talking about a company which just listed a year ago. Clearly, when you talk about this company, the kind of subscription it got and the listing day gains were spectacular. From there, in the next 6 months, it jumped nearly 400 to 500% in terms of the stock price. And now, in the last 1 year, it's nearly doubled. Yes, we're talking about KRN Heat Exchanger, smart returns that investors have made on this recently listed company as well. But let's understand, why are we talking to the company right now? First up, they have acquired Sphere Refrigeration Systems. So what is that rationale when it comes to this acquisition from here on? So that's the first question that we're talking about in terms of KRN Heat Exchange. Secondly, this is the most important, as Anushi has been pointing out as well to me, that the production ramp up at Neemrana plant is very important from here on. And the reason we talk about this right now is because in the last couple of quarters as well, they have been talking about this. This is the bigger piece story which continues to remain in terms of ramp up of the Neemrana plant from the third quarter, because in the first quarter, it was lower than anticipated. Second quarter also the situation was absolutely similar because, more approvals were coming in place. So what is the outlook looking like from the second half of FY26 and the subsequent performance that comes in the upcoming fiscals, Anushi?
Of course, with the ramp up expected, it's a 6x kind of a capacity that we are seeing at peak utilization levels. So, of course, the question would be on the top line and the margins over the next 3 years or so. But other than that, the other aspect that we are focusing on is US tariffs, how that has led to an impact in terms of where the exports are concerned, because in the first quarter we saw about a 17% of the export mix from just US itself. So that is one key point that we are looking at. Other than that, the data center business opportunity continues to remain a big one for the business, considering it's in the HVAC space that we are looking at, that's heating, ventilation and air conditioning space. So opportunity size and the growth from there on, what's the kind of numbers that we are seeing is something that we'll be seeing, right?
Absolutely. Let's tell the viewers what KRN Heat Exchange is all about. A company that listed on exchanges in October 2024. Clearly, they're engaged in, design, manufacturing of heat exchangers. They make goods for heat, ventilation, air conditioning, and the refrigeration industry as well.
Some of the products that we are seeing, they include condenser coils, this includes evaporator units as well as coils over there as well. Fluid and steam coils are also that we are looking at. But it's key clients which are in focus, Daikin being one of the important players that we are looking at, contributing significantly to companies' revenues. Apart from that, we have listed players like Blue Star as well as Voltas Limited also in focus. Kirloskar Chillers are some of the other clients that we are seeing for this particular counter. So, this is the client profile that we are seeing for KRN Heat.
Okay, let's talk about one of their new subsidiaries. We're talking about KRN HVAC products, and this is where the opportunity lies, because here they're looking to hike value-added products in the existing portfolio and focus on manufacturing certain types of heat exchangers. And this is a segment which will potentially gain from here on. And if you're talking about new products, it's more to do with bar and plate heat exchangers, your oil cooling unit with the blower and motor, as well as the roll bond evaporator. So that's what we're looking at as well. But the new unit becomes absolutely important, right?
Yeah, in fact, the IPO's purpose was also for forming this subsidiary and for ramping up the commercial production of this particular plant. That's a Neemrana plant that we are looking at. Of course, commercialization started from May 2025 onwards. This subsidiary was signed with 1,000 crore of a MOU with Rajasthan government is what we are looking at. And this would be, with the new products in place, they'll be entering into railway electrification, heavy equipment, and industrial cooling sectors as well. Of course, capacity from these levels, as we spoke about earlier, would see a 5x of a jump up. So significant opportunities in terms of top line is what we are looking at. It's also qualified for a PLI scheme, and this is worth 147 crore of an incentive that we are looking at. So that's the other big update that we are seeing for this.
Okay, very quickly, geographical breakup, 84% of their revenues coming from the domestic market. You're talking about nearly 15% from the exports. And in terms of the export regions, majority is with regards to United Arab Emirates, which is around 46%. Canada, Italy and USA are in that range of around 15 to 18, 19%, and others is a minuscule 1.2%. That's what we're looking at in terms of the geographical breakup. And they've signed a business transfer agreement as well with Sphere Refrigeration Systems. So that is one of the key questions we are going to talk to the management about. And this is mainly to acquire the bus air conditioning division. How big an opportunity this will be for the company is what we have to see. And they're expanding their product portfolio across transport and mobility cooling. So these are the areas that we're looking at. But first up, let's quickly look at all the rating parameters, Anushi, from here on. You're talking about the income statement check, the balance sheet, cash flow, return ratios, shareholding, street credentials, the valuation picture, across parameters, and the outlook from here on is going to be crucial. Anushi, what is the income statement telling you?
Right. So if you look at the 2-year perspective, that's the kind of financials that we are seeing. 32% is the kind of CAGR growth that we are looking at. Margins, they have come down slightly to around 16% or so level. This was with the increase in employee costs also that we'd seen in the first quarter. In the first quarter, they reported a 20% of a growth, which was lower than what the street was anticipating for. But it was because of sharper jump in employee and other expenses that we are looking at. Net profit is something that we'll continue to see with how the tax rate would shape up. So, but for now, you've given this a thumbs up on basis of what's the kind of opportunity also we are seeing forward.
Right. Let's look at the balance sheet. Strong growth in equity is what we've seen, and that has actually surged, especially in FY25. Now, this is actually reflecting retained earnings or capital infusion by the company. The debt, yes, has been slightly controlled. So if you talk about the secured borrowings, they have come down relative to FY24 in FY25, and even the assets have increased a lot. Now, this is suggesting either a repayment of debt that has happened, or they funded their, via equity or internal accruals is what they're looking at from an expansion perspective. And as equity has grown rapidly more than the debt, you can see that the debt to equity ratio is getting more comfortable as well. So the growth that is coming in terms of assets and the current assets substantially improving its financial muscle as well, and the capacity to leverage newer opportunities, and hence a thumbs up on the balance sheet.
Yeah, of course, this is with the IPO taking place, so the net worth value would increase with this infusion that we are seeing. But cash flows, we've given it a neutral rating. Cash flows from operations, if we are looking at 21 crore is the size that we are seeing. This in context with the EBITDA, we are looking at a multiple of around 30% or odd. So net cash flows for FY25, we are looking at almost a zero figure for both of these fiscal years. So we'll continue to track this particular metric, but for now, it's a neutral on our side.
Okay, now let's look at the return ratios. Now we have to look at the return on equity and ROCE. The company had very high returns in FY22 and 23. The ROE then started to drop. In fact, if you talk about the levels as well, for ROE from 42%, it's come down to 16%. And if you see the return on capital employed as well, there is a steep fall. Now, since the ROE is dependent heavily on the net profit relative to the equity, this is actually suggesting that the net profits have either gotten smaller relative to the equity base, or equity has increased significantly without profits keeping up. Secondly, if you talk about the return on capital employed as well, that has dropped, but not as dramatically as the return on equity. Because even with the decline, the returns are not necessarily poor right now. We're talking about a ROCE in that range of 14 to 20%. We're talking about a ROE in that range of almost 10 to 16%, which is still acceptable in many industrial or manufacturing settings in India, especially considering the rapid growth that the company is looking at. The ROEs of 50%, 70% that the company actually achieved in the past were exceptional, and hence a neutral rating here.
Okay, coming to the shareholding part, promoters holding about 71% stake. Of course, this is with IPO dilution also taking place, but it's a stable number that we've seen in terms of how the promoter holding has been concerned. FII is about 2% or odd, so is the stake that we are looking at. What's interesting is the public shareholding, wherein Mukul Agrawal, since the last 3 quarters or so, he has about 1.61% of stake in the company. Even Vito holds some percentage of stake as well. So, considering, investor confidence, and that's the HNI investor confidence, we've given it a thumbs up, along with the promoter holding also, which remains on the stronger side.
Okay, let's look at the street credentials. IPO price 220, listing price 480. Since listing, the stock is up 86%, and that tells you the story. In the last 1 year, we've seen strong returns that have come in from a KRN, and hence a thumbs up.
Okay, coming to the valuation part of it, if you look at the 1-year forward multiple, it's relatively on the expensive side that we are seeing. 70 times is the kind of multiple that we are seeing. Of course, the management has eyed a double-digit growth for this year, but it's the PAT number that should be important considering, last fiscal we'd seen that the tax rates had gone subsequently up even in this particular year because of the heavy capex that they are making, that the margins and the net profit numbers would remain on the similar lines. So given this context, we are still giving this a down rating to your forward multiple, however, is pegged at around 34 times. So, but that's on the valuation picture that we are looking. Hiral, what about the analyst recommendation?
Again, no major, analysts that cover the stock. So, I mean, you just have one buy rating, which is an upside of 21%. So that's absolutely skewed. Should not be considering this aspect at all. Let's look at the outlook. Full-scale revenue and margin benefits, what the company has indicated earlier, will actually start from the third quarter onwards. So this becomes a key monitorable whether the second half of FY26 is really better than the first half or not. Secondly, exports, which are still in initial double digits, over the next 3 years, they're expecting it to actually go up to 50%. So what is the margin accretion that they're going to see on the back of this? Because they're expecting margins also to increase by almost 100 to 200 basis points by FY27. So this export at 50%, margin growth at 100 to 200 basis points is a very strong combination in terms of the outlook that the company has given. And the group tax structure, that is expected to come down to 20% in the next 2 to 3 years. Currently, if I'm not mistaken, it's in that range of around 27 to 29%. So that's what you're looking at in terms of the outlook as well. So basis this, again, a neutral rating is what we've given on the street coverage. But let's quickly take you through the final performance ratings from here on. If you have to look at all the parameters, 2 thumbs ups, income statement and balance sheet. So strong business. Cash flow return ratios is a neutral because of the exceptions that we've seen in the past years. Your shareholding street credentials again is a thumbs up. It's only the valuation which is a thumbs down. Again, your outlook pretty neutral. Basis this, we've given it a 5.5 on 8 on NDTV Profit. But let's also get in Santosh Kumar Yadav, CMD of KRN Heat Exchangers, to talk to us about the bigger piece of the story that continues to remain ramp up of production. Santosh, welcome to the show and a pleasure to speak to you as well. What do you have to tell us with regards to the Neemrana plant? Because we're talking about ramp up from the third quarter. First quarter, second quarter, similar situation, lower than anticipated. What should investors watch out for?
So still we are on same page, like this ramp up will start from this quarter only. And in second quarter also there will be some ramp up you can see on results once comes. And main input will come from this quarter and last quarter. However, still slightly setback from USA market because of tariff, but we did this complete product, so we will also gain some turnover from this bus air conditioning division as well.
Okay, Mr. Yadav, if you're looking at the capacities that are set to expand around 6 times versus the current levels, even peak utilization levels are expected by FY29 or so. So just want to understand, with this, what would be the overall top line guidance as well as margins? Because I understand for FY26, you're eyeing for a double-digit growth.
So top line growth, like numbers will be remain same still. So like this year we are targeting around 20% and then 50%, and then from third year around 80% of capacity what we added. And about margins, so this year you can say slightly similar type, but from next year it will be up because of some incentive and then new schemes like PLI and then REIPs and then also new income tax scheme. So if I club these, it will be able to increase 1 or 2% on existing, of course, PAT.
Mr. Yadav, just on that, you said you were awaiting approval in terms of these Rajasthan investment promotion scheme as well as the PLI benefits that you're seeing. Now, along with this, even the export benefits will accrue from the third quarter onwards. So what's the picture for guidance? I want to understand this on a longer term perspective.
So now, as of now, we are doing around 12% of PAT. So that I said we can able to increase slightly 1 or 2% because other side our depreciation and overhead will increase in new facility, but these other benefit we added. So that's why I'm saying we can able to increase 1 or 2% on existing PAT.
Okay. What about the tax rate? Will that also come down to 20% from the current 28 to 30% that we had seen in FY25? Just want to understand the timelines.
It's earlier we are in 23%, but now new facility have 15%, and after SAS is around 19%.
Okay. Now, on the export side, if we say, have US tariffs impacted your operations? Current export mix, if you look, at 16%, and you're eyeing for a 50% of an opportunity in the next 3 years. So, I want to understand on that front as well.
So as of now, like we are developing, so there is impact for sure from USA market because of this tariff. So honestly, nobody can like assume that we will have 50% from USA. So we're expecting maybe next in couple of weeks it will solve, but can't say because earlier we thought it will not come, but it's finally it came. So there is some impact from USA, but other side from Europe side and then Canada side and then UAE. We are developing. So recently we hired one exports senior vice president. So he joined 1st of this October only. So now he started working and we will do some exhibition. So it will increase, but slightly down because of USA. Because earlier our thought was to increase rapidly in USA market, but now it's slight back. But we are trying to covering from Europe and Middle East.
Okay. So with these tariffs in place, do you think that the export contribution target of 50% can be achieved in the next 3 years? What's the export growth that you're penciling in for FY26 as well then?
So this 50% in next 3 years, we we told for our existing like heat exchanger business only because we added the other part also. So there will be no less export, but for our existing heat exchanger, for sure, we are targeting 50%, but now maybe we are waiting for a couple of weeks for USA market tariff. If not reduced, then of course, we have to think about Europe market and UAE market slightly more. So maybe that we can maybe confirm after 3 to 4 weeks once we have confirmed that about tariff.
So Yadav, now coming to the data center opportunity also, last time around 7% is the kind of contribution that we spoke about. Now with Google's around 500 billion investment or so, that creates a huge addressable market for the HVAC industry. How do you stand to benefit from this?
So as per my personal opinion, data center in India for sure is growing, but it's like in terms of heat exchanger manufacturing, it will come maybe after maybe from now, main impact from maybe after 1 year. So in terms of capacity, we are ready for that. If we receive some big orders, we can achieve easily because now we have production is in line and we can have capacity is big compared to other manufacturer. So if there is the order big from OEMs, then we can serve in better way. We have big capacity, especially for big coils. So we developed our facility to make heat exchanger till 14 meter. So especially for big coils, you can say we are the only one who can have such facility, can make with the good infra 14-meter coils.
Now, coming to the recent updates, you've acquired Sphere Refrigeration Systems bus air conditioning division. Want to understand the key rationale behind this?
So actually, earlier also I told in many calls. So like what we did in terms of backward integration. So now we have complete backward integration to make the complete any assembly, especially in commercial side. So there is like component side, mainly heat exchanger, then sheet metal, and manifolds, and then tubing side. So all we have now in-house. So and we can able to make any HVAC system. So that was the basic idea, and for that, since last 6 to 8 months, we are looking some company who have already like technology and they have like products already, and we can launch in India based on our logo and based on our product portfolio. So that's why this company, like we bought bus air conditioning, and later on it will add like truck refrigeration, and thus we will enter in Indian Railway complete HVAC system. So they have promoter side like Pramod Verma and then Sukhdev Singh and Sandeep Singh. So they have almost more than 25-year experience on similar field. And earlier they worked for Sparrow's Motherson. Then later on they have promoter side own company Sphere Thermal System Private Limited. And then they have now Sphere Refrigeration System Private Limited. So we bought this bus air conditioning business and we merged in our subsidiary, KRN Heat Products Private Limited, and we will start production within this month only.
Okay, so what's the overall consideration size of this acquisition, and are you going to fund it with internal accruals?
So amount-wise, I cannot show the complete data, but it's not big amount. So basically, our idea to achieve the production target, and then we can link to, of course, with the profit to promoters. So there is not big amounts, but however, what amount is need, we paid from income profit only.
All right. Thank you so much for joining us on the show and sharing your views. So that's the management of KRN Heat Exchanger talking to us with regards to what are the growth prospects from here on, how exports is going to contribute, what's the target they have, how tax rates are going to go down, and the opportunities that lie ahead in newer businesses as well. But completely out of time. With that, it's a wrap on this edition of KYC from Anushi, the team that put the show together, and myself. Lots more lined up on the other side. Continue watching NDTV Profit for your profit.